$44.8 billion for mayonnaise and taco seasoning. You cannot tell me the math works on this McCormick and Unilever Foods rumor.
It absolutely works. You are combining two massive distribution networks. They are building a global flavor powerhouse.
A flavor powerhouse? You sound like a pitch deck. Show me the synergies that justify a $45 billion valuation.
I will. But first, we need to look at how Brookfield just quietly swallowed £30 billion in UK pensions. The rundown. I'm officially calling it. It's big pharma shopping week. We've got Merck grabbing Terns Pharmaceuticals for $6.74 billion. Biogen taking Apellis for $5.6. And Eli Lilly scooping up Centessa for $7.3 billion.
Up to $7.3 billion. That's the detail everyone misses in the press releases. The actual upfront price for Centessa is rumored to be closer to 6.3. You have to read the milestone structures, Nate. They're heavily backloaded.
Okay, fine, but the broader point stands. Big Pharma is just outsourcing its R&D right now. They look at their patent cliffs, panic, and buy a pipeline to slap a premium on it.
That's a lazy take. Centessa has a highly specific hemophilia asset that fits perfectly into Lilly's portfolio. It's not just throwing money at a wall in a panic. It's highly targeted. Look at Biogen and Apellis. The target stock is surging because the market knows the synergies are real.
Agree to disagree. I still say it's banker-driven momentum. Speaking of throwing money at a wall, did you see the Crown Reserve news?
Don't tell me.
Oh yes, a SPAC in this economy. They're merging with Carvix in a $1 billion transaction.
I honestly thought we left SPACs in 2021. Are we really doing this again?
Nature is healing, Maya. The blank check companies are returning to the rivers.
Please stop. I prefer actual strategy. Look at Legrand expanding its data center footprint. They just announced dual acquisitions of Keydak in China and TES in the UK. Everyone is desperately trying to build the physical infrastructure for AI.
It's the only narrative keeping global M&A numbers afloat. Because if you look outside the AI bubble, it's rough. Buyout values in South Korea plummeted by over 50% in the first quarter. Total macroeconomic freeze.
Right. You need the AI halo to get a deal done smoothly. Or apparently you just need to sell soup and spices.
The flavor powerhouse rumor? I love this one. McCormick and Unilever Foods.
The whispers on the street are saying $20 billion. Some analysts are floating $44.8 billion. I can't even fathom a $45 billion deal for condiments.
Mayonnaise and garlic powder is a recession-proof combo. We'll watch for those official filings tomorrow. But speaking of massive piles of cash, we need to talk about Brookfield.
Right. $3.2 billion to buy Just Group.
They're scooping up £30 billion in pension savings. How does an alternative asset manager suddenly become the king of UK retirement money? The big one. $3.2 billion for a UK pension provider. Brookfield is officially playing Monopoly, while the rest of the market is stuck playing checkers.
It's £2.4 billion if we want to be local about it. But yes, Just Group is officially off the board. The ink is dry.
It's a masterstroke. They just bolted on 700,000 customers overnight.
And £30 billion in pension savings. That's the real prize. Brookfield doesn't care about the retail branding. They just bought a massive captive pool of permanent capital.
Exactly. You want sticky money? Pension money is the absolute definition of sticky. People literally have to die for you to lose the account.
Okay, a little morbid, but mathematically accurate.
I'm just putting my old banker hat on for a second. Look at the sheer scale of this. This pushes Brookfield's global insurance AUM to roughly $180 billion. They are in the stratosphere now.
Right around there, yeah. But Nate, I was digging into the footnotes on the Just Group portfolio this morning. This isn't just free money. Annuity liabilities are incredibly heavy. You have to match those long-term liabilities with actual yield. Brookfield is making a massive bet that they can outinvest the historical yields Just Group was getting.
Which they absolutely can. Come on, it's Brookfield. They have direct access to real estate, infrastructure, private credit. They can originate their own assets to back these exact liabilities. It's the perfect closed-loop financial system.
See, that is where you and I fundamentally disagree. The closed-loop system sounds brilliant on a pitch deck, But you're taking UK pensioner money and funneling it into Brookfield's alternative asset machine. That introduces major liquidity risk. If private credit valuations take a sudden hit, suddenly that £30 billion piggy bank looks a lot less secure.
Oh, please, you're acting like they're putting grandma's retirement into zero-day options. They're putting it into toll roads and data centers.
I'm not saying it's reckless. I'm saying it's illiquid. There is a massive difference between holding a boring government bond and holding a minority stake in a private data center.
But the boring government bond doesn't pay the yield you need to actually service the annuity. That is the entire point of the transaction. Brookfield is doing what Just Group simply couldn't do on its own because they didn't have the origination engine.
Fine, I'll concede they have the engine. But $3.2 billion is a serious premium for a business that was basically trading sideways for 3 years.
You pay up for scale. $180 billion in AUM gives you a seat at the table for literally any mega deal on the planet. And the market is rewarding scale right now. Look at the data. Financing conditions are stabilizing, and we're seeing a surge in mega deals crossing that $10 billion mark.
True, the giant checks are definitely clearing again.
Speaking of giant checks and hungry buyers, wait until we get to the rumor mill today.
Oh, I know exactly what you're going to bring up.
A $45 billion flavor powerhouse. Do I have your attention? Voices. I'm looking at a research note right now claiming the global M&A market is, quote, experiencing renewed momentum, unquote. They're pointing to stabilizing financing and a surge in mega deals over $10 billion.
Who wrote that? Because they clearly skipped over the Asia-Pacific desk.
Oh, here comes the footnote police.
I'm just saying, you can't call it global momentum when buyout value in South Korea just plummeted by over 50% in the first quarter. Macro uncertainty is absolutely still biting over there.
Fair. But the mega deal momentum is real in the West. Look at the pharma board right now. You have Eli Lilly dropping up to $7.3 billion on Centessa. Biogen taking out Apellis for $5.6 billion. And the industry watchers are saying AI is the magic dust making everyone hit the buy button.
Wait, read me the exact quote on the AI part. I need to hear this.
Let's see. Quote, artificial intelligence is no longer just a sector trend, but a crucial driver accelerating strategic deal execution and competitive intelligence across all industries. End quote.
Wow, that is just pure banker word salad. Accelerating strategic deal execution. Are the algorithms negotiating the term sheets now? Are they doing the due diligence?
Hey, I used to write that exact kind of fluff in pitch decks. It basically means we need a reason to justify this massive premium to the board, so let's say AI a lot.
Exactly. It's corporate theater. Show me the revenue multiples, not the buzzwords. I guarantee Brookfield didn't buy Just Group for $3.2 billion yesterday because of an AI algorithm. They just wanted to add $30 billion in pension savings to their portfolio.
Okay, speaking of massive premiums and corporate theater, what about the consumer space? Because if the whispers about this flavor powerhouse are true, we're looking at something way bigger than $10 billion.
Oh, you mean the McCormick and Unilever Foods rumor?
Try $44.8 billion. I'm hearing they're getting very close and we need to talk about it. Spill the tea. I just want to know who is leaking a valuation spread that wide. You don't just accidentally whisper $20 billion to one reporter and $44.8 billion to another.
Exactly. A $24 billion margin of error on this McCormick and Unilever Foods rumor. Did someone forget to carry the one?
Hey, maybe they value mayonnaise really, really highly over in Europe. But seriously, a $44 billion flavor powerhouse. You merge McCormick's spices with Unilever's condiments, and you basically own every summer barbecue on Earth.
I'm not buying it. Not at that top-end number. That screams of some banker floating a ridiculous premium just to test shareholder appetite.
Oh, come on, Maya. Look at the macro. Financing conditions are finally stabilizing. We're seeing a massive surge in mega deals breaking the $10 billion mark. They have the debt capacity to pull off $44 billion.
Debt capacity and strategic sense are two very different things, Nate. You know that. Just because you can borrow the money doesn't mean you should spend it on ketchup.
Spoken like a true skeptic, fine. If you hate condiments, how about telecom and trash?
Always my favorite combination.
Unity Group shares are bouncing all over the place. Word is TPG and T-Mobile are circling their assets.
And over in the garbage sector, GFL Environmental is supposedly closing in on a mystery waste operator in Texas. Trash is incredibly recession-proof. I'd take a solid landfill acquisition over a $45 billion spice merger any day of the week.
I'll remember that next time we get lunch. But we really need to watch the McCormick and Unilever camps tomorrow for actual filings. We also need to see where Eli Lilly's acquisition of Centessa finally lands.
Right? Because the rumors there are bouncing between 6.3 and 7.3 billion.
Just a casual billion-dollar rounding error? Speaking of massive numbers, we need to talk about what Brookfield is doing with $30 billion in British pension savings. Tomorrow's radar. I'm telling you, we're going to see a filing tomorrow on McCormick and Unilever Foods.
I'll believe it when I see the Edgar alert. The whispers are putting the valuation anywhere from 20 billion to 44.8 billion.
Exactly. That 44.8 number means bankers are leaking the premium scenario. It's a brilliant flavor powerhouse play.
Oh, come on. A $24 billion gap in the rumor mill. That's not a spread, Nate. That's an entire Fortune 500 company someone misplaced in the couch cushions.
You just hate consumer staples.
I hate sloppy leaks. I'm much more interested in the Eli Lilly and Centessa close tomorrow. We need to see if that final price actually hits the 7.3 billion cap, or if they settle closer to 6.3.
Fair point. A $1 billion earnout gap in biopharma is where the real drama lives.
Exactly. Read the footnotes tomorrow morning and we'll see who actually got played.